The best of money matters. Under the radar.
You're listening to Money FM 89.3, and it's now time for Under the Radar with me, Chua Tian Tian. Now, today we're going to bring you an inside look into an Italian pharmaceutical firm with over 135 years of history. Now, founded in 1886 in Naples, our guest for today is from Menarini Group, a leading pharmaceutical and diagnostics company with a presence in over 140 countries. Now, the firm prides itself as a leading provider of important healthcare brands, with its 18 manufacturing plants producing over, get this, 609 million packets of products a year. Now, to this end, Menarini said it operates across the entire commercial value chain, from clinical development, regulatory approval, and product launch to lifecycle management, with a diverse portfolio of proprietary and partnered brands in key therapeutic fields. Now, that includes consumer health, dermatology, allergy or respiratory, gastroenterology, cardio-metabolic, anti-infectives, oncology or specialty care, and even more. Now, all in, Menarini reported consolidated turnover of 4.375 billion euros in 2023, with international markets contributing 79% to the numbers. But really, how much of this is contributed by demand from the Asia-Pacific region? And in the meantime, Menarini is also seeing a number of interesting developments. For one thing, Menarini APAC had in June 2024 expanded its partnership with Pharmacosmos to tackle iron deficiency in patients in Singapore and Malaysia. So just how important are such licensing deals and partnerships in helping Menarini broaden its offerings while lowering R&D costs? Now, lots of questions, and joining me here in the studio is Glenn Godrest, CEO at Menarini APAC. Glenn, welcome.
Thanks so much, Tian Tian. It's an honour to be here, and thank you for the invitation to talk to you today.
Great to have you join us. And Glenn, we've briefly talked about Menarini as this Italian pharmaceutical firm with over 135 years of history. But let's hear from you. Fast forward to today, how would you describe the firm's value proposition and business model? What is the firm's positioning against other pharma giants like your GSK or your MSD?
It's an interesting question, but let me just touch on the history of the company, because it's been an absolutely remarkable story of growth. As you mentioned, we started from a single pharmacy in Naples in Italy around 140 years ago. And today we're a company which is present in 140 markets around the region. We have 17,000 employees, 18 manufacturing plants, and 9 R&D facilities. So it's been a remarkable story of growth. Here in Asia Pacific, we're present in 13 markets across the region. Our head office is here in Singapore. We have 200 employees just down the road in Mapletree, business city. And in the region, we have rapidly expanded as well. Over the last 13 years, we've turned a business which was predominantly a CSO business before Menarini acquired a company called Invita into a fully fledged pharmaceutical company. What makes us different comes down to our business model. We are a business which is entirely based on partnerships. Today we have 50 partners in the region and 200 proprietary brands. We're also a business that believes very strongly in what we call a glocalized approach to how we run our business in the region. What does this mean? It means traditional pharmaceutical companies will usually start with what works in the US, what works in Europe, and then they'll almost consider Asia Pacific as a secondary consideration and think, how can we launch products within the region? How can we make them fit? And often they simply don't fit. So we take a glocalized approach, which means we start with the needs of all the individual markets. And then we design a portfolio working with a partnership model to suit every single market that we compete on an individual basis. That's a key part of our strategy and what really makes us different and sets us apart. In addition to that, the area I'd like to just touch on is our business model, our commercial model.
Okay.
Certainly, we are a company that's been built on sales force and the strength of our sales force. But since COVID, we have rapidly developed our digital engagement capabilities. And just last year alone, for example, we reached 60,000 doctors outside of our field force through digital technologies like email and messaging. And this is an area which we've rapidly invested in. We've also seen tremendous growth and improvement in.
Okay. Now, let's take a look at your operations, Glenn, because Menarini operates across the entire commercial value chain, as we talked about earlier, that ranges from clinical development, regulatory approval, all the way to product launch, lifecycle management. And that happens across a diverse portfolio of therapeutic fields, which includes your consumer health, dermatology, you have oncology, you have specialty care at the end of the spectrum. So which would you say is the most important part of the value chain that you look at, and the most important therapeutic field that Menarini focus on ultimately when it boils down to the dollars and cents?
Our company has been built on primary care. For the listeners, when I say primary care, what I mean is it's conditions that you would traditionally see your family physician or your general practitioner to treat. Areas like hypertension or allergy, for example. So if you look at our core therapeutic areas today, it will be cardiovascular disease, dermatology, allergy, and consumer health. Take an area, for example, of cardiovascular disease. If you look across our region today, a recent OECD report showed that this is still the leading cause of death in Asia Pacific today is cardiovascular disease. Of course, rising rates of obesity, diabetes and so forth contribute to that. But this incidence is expected to continue to increase over the next 10 to 20 years, which means despite all the efforts that the industry's put into treating this area, there's still a huge unmet clinical need for new treatments and additional education for patients and support that's required. So this continues to be a key area for us. Beyond primary care, we have a big consumer health business, which has been growing exponentially over the last 10 years, double-digit growth rates every year. The listeners may be familiar with a product called Dermatix, which is a household name here in Singapore and across the region for scar treatments. This is one of our flagship consumer brands. The interesting thing, is beyond primary care and also consumer health. We're also very passionate about using, the strength that we have in these areas to invest in rarer diseases in some markets. An example of that is in Australia. We have a partnership with a company called Sobi, a European company, that we bring a product to the market that treats a very rare hereditary condition called HT1.
Okay.
This condition affects only 1 to 3 babies born every year in Australia. But it's truly life-saving. Without this treatment, these babies would either need a liver transplant or they would unfortunately pass away. So the strength that we have in primary care, the strength that we have in consumer health enables us to invest also in areas that have the highest unmet clinical need and sometimes fly under the radar of other companies.
All right, Glenn, taking a look at your global presence, I understand Menarini has 18 manufacturing plants and 9 centers of R&D dotted across the world in places like Florence, where you're headquartered. You have Barcelona, New York, and Singapore. So take us through your global presence. Which is the most important market for you, ultimately, when it filters through to your balance sheet then?
Well, across the Asia-Pacific region, we have a business now which has quadrupled effectively over the last 13 years. And our revenue today is approaching $1 billion US. So we're a significant player now within Asia-Pacific. Our number one market today is China, which is fairly consistent with many other multinational companies. But again, the thing that's quite different with Menarini compared to traditional MNCs, with traditional MNCs, you will see that their major markets are usually the reimbursed markets. That's where the government pays for medications. Yeah. So, for example, you will find in most traditional MNCs, China, Australia, Korea, Taiwan will be their main markets in the region. Yeah. We're a little bit different because our portfolio is primary care driven, consumer driven, which means that our bigger markets are not necessarily the reimbursed markets. Yeah. Beyond China, we have a big business in Thailand. That's our second biggest market. Beyond that, it's Philippines. And beyond that, it's markets like Malaysia. The reason is because primary care consumer health brands are generally more affordable. They're the mainstay of treatment. And we're not just focused, for example, on very, very high-priced, innovative specialty medications, which traditionally in this region really suit the reimbursed markets.
Okay. So, Glenn, what would you say is the role of the firm's APAC markets, including Singapore, to your broader portfolio at Menarini? Which are the key supply and demand markets within APAC? Because I know your Thailand business is the fastest growing MNC in Thailand in terms of CAGR. So tell us more about the supply and demand markets.
Yeah, sure. So Asia Pacific contributes about 20% of our global revenue to Menarini. We're one of the larger regions in the world. We actually have aspirations to eventually be the number one region within the group outside of our oncology business.
Okay.
That's what we aim to be. In terms of contribution to sales, as I mentioned, China is our biggest market, followed by the Southeast Asian markets. We have aspirations to launch and to grow our business in specialty care in markets like Australia and Korea, for example. Thailand, we're particularly proud of Thailand. Thailand, literally, we are ranked number 13 in the Thai market. So we're a top 20 player in Thailand. The portfolio in Thailand is unique to the market, as I mentioned before, because we take this globalized approach. So we have a strength, for example, in Thailand in aesthetics, which is not a focus in other markets because Thailand is a huge aesthetics market. And we built an aesthetics business in Thailand. We have a strong consumer health business in Thailand. But the thing I would have to say that's a success in Thailand has been the strength of the organisation and the strength of the capabilities. We've got a very strong management team in Thailand. We've got very strong sales force, very strong commercial and support functions. And as with any business, I think the key is if you have the right people, the right organisation, the business follows. And that's certainly the case of Thailand.
So Asia Pacific as a whole is more of a demand market for you rather than a supply market, so to speak?
Yes and no. Certainly as I mentioned, we supply 13 markets across the region, but we also have a manufacturing facility in Indonesia, which we supply the rest of the region. For example, Dermatology is supplied throughout Asia Pacific through our manufacturing facility in Indonesia. And we're constantly looking at opportunities to expand our manufacturing capacity in the region because this is the Asia for Asia strategy, if you like. There's tremendous advantages with doing so. It reduces the time, the supply chain time to bring product to the region, our responsiveness, et cetera, So we have a manufacturing presence in the region. It's one we're looking to continue to expand. But for now, we're very focused on supplying, the 13 markets across the region through this localized approach that I mentioned.
Okay. Now let's take a look at where things are at for Menarini at this point in time, Glenn. And don't mind us being the money-loving ones here at Money FM. At a global level, right, Menarini reported consolidated turnover of 4.375 billion euros in 2023. International markets contributed 79% to the numbers. So what are the key drivers of growth bolstering their numbers? How much of this is contributed by demand from APAC, and how are things looking into 2025?
No, thank you. The business has proven to be very resilient, I think, globally. Most of our business today does come from Europe, which is the home of the company. The European market has been fairly, if you like, established. So it's not easy to grow in Europe. The continued growth is coming from a few areas. Certainly the entry into oncology in the US has been a key factor. You'll be familiar with the deal that was signed in 2020 to acquire Stemline and create a new company which is called Menarini Stemline.
Yes.
And we recently launched our first breast cancer medication into the US, which has been a tremendous success so far. That's been a key growth driver for the group. Beyond that, I think the company is looking more and more to emerging markets to diversify the business outside of Europe, for example. So we're seeing very good growth in Middle East, in Africa, South America, and also within the Asia Pacific region. Within the Asia Pacific group, we continue to see, fantastic growth. If you look at our performance, I have to say that the market in APAC has not been easy over the last 12 months.
Yeah.
If you look at the growth of the pharmaceutical market, it's literally 1% this year. So whilst, healthcare is somewhat resilient to the economic circumstances across the region, we're not immune to it. So the market has been fairly flat, and we've continued to grow our business at a faster rate than the market. And I think the key to success has been our partnership approach, And as I mentioned, the fact that we don't take a one-size-fits-all approach to our business across the region, we tailor our portfolio to the individual needs of patients in all the markets that we compete.
Okay. Now, if you're just tuning in, we're now in conversation with Glenn Godrez, CEO at Menarini APAC. Well, Glenn, let's stay on the topic of growth and appreciate if you could set our sights on the longer term. So if we go by estimation by Grandview Research, it estimated the size of the global pharmaceutical market at $1.482 trillion in 2022, and it expects that number to grow at a CAGR of 6.12% from 2023 to 2030. How aligned are you with this number at Menarini APAC, looking at how you're mostly focused on consumer health, so to speak?
Yeah, look, there's in terms of the outlook for our region, in terms of the healthcare market, there's drivers and there's barriers to growth at the moment. Certainly, the economic indicators of the region are not easy. Everybody's familiar with the situation in China now. That there's been a slowdown in China. We can also see that across the region, in some markets, there's political tensions. In other markets like Korea, we've had a doctor strike for the last 12 months, which has been ongoing. So there's things working against us. That's meant that the market's been fairly subdued in the last 12 months. The feeling that we have is fairly consistent with those projections that you mentioned. Historically, APAC market has grown at mid-single-digit growth rates. This year, we've had a subdued result in terms of market growth. We believe that we will steadily get back to those levels of growth. Mid-single-digit growth will be a reasonable, assumption and expectation moving forward. And again, we think, from our perspective, I always talk within and outside the organisation about the fact that we should never really use market growth as a reason why we do well or we don't do well. We're not the number one or two player in the region. In some markets, we're a fairly small player. An example, in China, we're not in the top 100 companies in China. Wow. So you can imagine that our opportunity for growth comes from the penetration of the business within the markets, not necessarily from how the market overall is doing, although it is a factor.
Just a curious question off the top of my head. Don't mind me asking this, Glenn. You talked about some of the near-term headwinds with regards to China and with regards to South Korea and that doctor strike.
Yes.
So how far does that divert your attention away from those markets in the short term, though?
Look, it doesn't. We work constructively with markets like China and markets like Korea to evolve the way that we do things in those countries to address those challenges. You take a case of China now. One of the big challenges in China is in the hospital business, where government policy has become much tougher in relation to procurement and the use of generics. So we take an approach in China where we have acquired a fairly large men's health asset in China, which is more related to the retail business, more related to the e-commerce business to generate the sales than it is in the hospital business. So I think you can deal with these challenges through taking a constructive approach, designing your portfolio in a way that deals with the local circumstances, and making sure, as you say, most importantly, that we don't take our eye off the ball, which is, a lot of opportunities across the other markets in the region, which continue to hold a lot of promise. So we certainly don't let those challenges distract us at all.
Earlier, you talked about mid-single digits in terms of CAGR growth. So what do you think are the key trends supporting those numbers, say aging population, the move towards community care, or even a growing middle class in areas like Thailand? Yeah,
so very clearly, the population is growing in the region and people are not getting any younger. As I mentioned earlier, we see the incidence, unfortunately, of cardiovascular disease, diabetes, increasing. As a company, we don't see that necessarily as a positive thing, but of course it presents opportunities for us to bring in to the market medications that suit the needs of the region and the markets within the region. We can do that very quickly because we don't rely solely on our own R&D capability. So we can respond very quickly to the needs of the markets, the needs of the patients in our region through signing partnerships. Now, you take a case recently, like you mentioned earlier, with Pharmacosmos. 1 in 3 women within Singapore suffer from an iron deficiency. And for many patients, they can't take or shouldn't take an oral medication because they have very severe bleeding, they may have absorption issues, they may have difficulty swallowing. So we signed a deal around about 12 months ago with Pharmacosmos to bring an iron supplement to the market, which is an injectable infusion. And this iron supplement fills a very significant unmet need of the region. We can move very quickly to address that need. So this, I think, is where we're heading as an organisation, is understanding the needs of the markets, bringing medications in that suit the need of our region.
In the meantime, you talked about that partnership with Pharmacosmos in June 2024 to tackle iron deficiency in patients in Singapore and Malaysia. But aside from that, there is also a partnership with Astellas Pharma in September 2023 that looks at the treatment of arthritis. So all in, how important are such deals and partnerships in helping Menarini sort of broaden its offerings tailored to the needs of the markets while keeping your R&D costs low? Any more of such partnerships in the pipeline?
Yeah, sure. Well, certainly, as I mentioned earlier, we do invest heavily in R&D. In fact, all of the profits of the company go back into the business in Menarini. We have 9 R&D facilities. We have a huge business development focus in the business regionally and at a corporate level to build new partnerships because we think that it's fairly short-sighted to think all the innovations is going to come from ourselves. You have millions of biotech companies, drug discovery companies out there with tremendous innovations that we can tap into, and we can bring solutions to the market much quicker than what we can by developing everything, in our own R&D facilities. So partnerships for us are the backbone of our business. Every single asset that we have in the company today can be traced back to some form of partnership in its history. Every year across the region, we have around about 50 to 100 new partnership opportunities that we assess.
Wow.
We have a strong business development capability. We have a strong alliance management capability, and we are constantly looking for more opportunities. It's our entire business.
Okay, any teasers for us then?
Well, look, I can tell you that we are continuing to expand our specialty care business, and we're highly focused on that. Okay. And we have a number of assets in our pipeline that are aligned to our therapeutic areas of focus, like cardiovascular disease, in addition to dermatology, allergy, and, for example, GI.
Okay, now I just want to follow up on a point that you mentioned earlier. You said that Menarini Group has reinvested its profit and its growth, so I do want to add on that. That has happened since 1992, so close to about 30 over years now. And before we let you go, Glenn, keep us excited. What are some future plans for Menarini for the year, both at a global level, if you may, or at APAC level? And what can we also expect back here in Singapore?
Sure. So globally, I think you can read the headlines that certainly the expansion into specialty care and specifically oncology is a key focus. We are busy signing deals at a corporate level to reinforce our primary care business, and we continue to stay focused on growing the emerging markets in particular, as I said, Middle East, Africa, Asia Pacific, South America being some of those regions that are a focus. Within the region, I would say certainly we're very excited about the entry into specialty care. Traditionally, as I said, we've been a primary care consumer health business. With the acquisition of Stemline and the focus on oncology across the business now, we're very happy to say that we are working on the launch plans for our first oncology breast cancer medication across the region. This is the first endocrine treatment for a specific type of breast cancer, which is called an ESR1 mutation, the first development of this type of endocrine therapy for 20 years. So it's very exciting for patients and also for the company. In addition to that, we see opportunities to reinforce our primary care portfolio, continue to build our consumer health business. And in addition to that, we also have emerging markets within an emerging region. Markets such as Myanmar, markets such as Cambodia, markets such as Sri Lanka. We continue to expand in these underserved markets as well. We've just recently launched, for example, called Dermatology
Wow.
in Sri Lanka, in Myanmar, and in Cambodia as well. So geographical expansion is an additional focus for the company.
All right, exciting days indeed, and we'll certainly keep an eye on those developments. Thanks a lot, Glenn. That was Glenn Gotras, CEO at Menarini APAC. Thank you so much for joining us today.
Thank you, Tian Tian. It's been a pleasure. So thank you for having me.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.